Hi, this is Amir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 29th of March. Starting off with the FTSE 100, which has bounced twice off from below the 200-day moving average. Nice bounce this week, almost on it. That's around 74.25, and above that, got a resistance line there around the 75.40 area. Want to see end of day close above that. That should hopefully take us towards what was formerly January support in the 77.20 area and up to the 50-day moving average at 77.70 at the moment. Time frame on that maybe the next week or two. End of day close back below the 200-day line seems to be quite unlikely, but then it will probably just lead to another test of the October uptrend line there around 73.65. So much more stable than we have been maybe for quite a while. On to the DAX, which was always more stable than the FTSE 100. We basically bounced off that floor of that rising trend channel from the beginning of October. We're just trying to break through the 50-day moving average here. So 15,300, let's call it. End of day close above that. We could be up to the highs of March and the year around 15,700. So that would really almost render the whole Credit Suisse sell-off into nothing. RSI now pushed through neutral 50, so we're around 52, 53, that kind of thing, which is a positive, and we've got the 200-day moving average rising. Just trying to see whether we've got the 50-day rising, but I suppose you could say at least it's trading flat rather than dipping down. About 15,700 could get up to 16,200 at that September resistance line projection by the end of next month. The worst we can see at the moment, 14,500, which is basically the 1-year resistance for this market, which was broken finally in January. Moving on to the Dow, and you can see the downside, the side of the 200-day moving average continues. The volatility's gone down. That's around 32,300. Really looking for, I suppose, a break either of the October support line there around 32,000 or the 50-day moving average there at 33,200. Otherwise, we're really in something of a range. But I suppose the good point here is that we are hanging near the 200-day line, and also the RSI near neutral 50, relatively stable. So if anything else, it'll just be rather boring rather than actually risking a move to the downside. But one has to be mindful of any end-of-day close back below the 32,000 level. On to Bitcoin, which had a bit of a shake earlier this week with the news of the authorities pointing the finger at Binance, but I suppose almost a victim of its success rather than anything else. Here we've seen, and we've seen what we were hoping for, i.e. a bounce off old initial March resistance there at 26,700. Recent support around that area, and ideally will break through the top of this bull flag, which looks like a mid-move consolidation by the end of the week. So 29,000 plus should lead us to the 32,000 area, hopefully over the next couple of weeks or even sooner. We've got the 50 and 200-day moving averages both rising sharply, and the fact that this market could withstand the Binance scare only underpins the strength here that we appear to have at the moment. Moving on to the small cap stocks, and the first one is Angus Energy, which seems to be trying to go for a breakout now, which is quite healthy. We've got good state of affairs as well, in the sense that we've got the 50, both the 50 and the 200-day moving averages both rising. That is equivalent to a golden cross. In fact, on many occasions, actually better than a golden cross. And the view now is that while we're above 1.6 pence in the 200-day line, on an end-of-day close basis, we could head to the top of that triangle from December as high as 2.1 pence by the end of next month. But the longer we stay above 1.6, the better there. Onto the stock, a stock which doesn't get much airtime here. It is Berkeley Energy. Here we've bounced off the 200-day moving average over the last couple of weeks. That's around the just under 19 pence, and above that we're looking for the shares to make progress within a rising trend channel from the end of 2021 up to 28 pence perhaps over the next 1 to 2 months. Could be sooner, could be by the end of next month. Obviously, if we have a move like we saw in January, then it would be by the end of next month that we get up to 28 pence, and that's really what we're looking for here while we're above 18 pence on the price channel floor. On to Caracal, where there's hardly ever a dull moment. Here you can see that we've had this stock hugging the, well, actually hasn't even been hugging the 50-day line. It broke above it last week and has managed to find support above it. That tends to be a very bullish signal. I call that a sideways shuffle. And the target here up to 0.46 pence. We just missed it last week, so maybe we'll have another go later this week or next week. The real kicker here would be when the 50-day moving average starts to turn up. We've already had a bounce off the neutral 50 level, but 50-day line rising would be a real plus and probably suggest that we'll not only get to 0.46 but even up to 0.6 pence by the end of next month. Ideally, we stay above 0.3 pence and the 50-day line in the interim. Another stock which has had a good start to 2023 is Cizzle, and after the peak earlier in the month near or towards 5 pence, seemed to have found good support, good double support there at old initial resistance, so the February resistance area around 3 pence, and that's roughly where we found support now. So looking for the shares to break the 4.3 pence area, which was the last peak, and head to 5.5 pence maybe as soon as the end of next month, while they stay above the 3 pence level. The other plus point is that both the 50 and 200-day moving averages are rising, and if you throw in the bounce off the RSI 50 level as well, looks like a strong picture for Cizzle. Stock which I covered a day or two ago is eEnergy, and here we're making some progress, breaking out of that falling wedge and through the 50-day moving average at 3 pence. Above that, looking for 5 pence, perhaps as soon as the end of next month, backed by bullish divergence, which has been that line's been in place since as long ago as December. The low lows, but the higher RSI trace. On to GreenX, where there's been a bit of a dip from the best levels, but it looks like the share's ready to have another go at making new higher ground. Rising trend channel there from October. Support there just above the floor of the channel, or on the floor of the channel, I suppose, at 32 pence. And the longer we stay above that, the greater the chance of move up to 60 pence as soon as the next 1 to 2 months, maybe by the end of next month, with a fair wind behind it. We've got the 200-day line rising, just waiting for the 50-day line to start turning up, and that'll probably accelerate the upside process. GSTechnologies is next. Big percentage riser today, but hasn't actually done too much to the chart apart from deliver us a rebound off the 50-day moving average around 0.4 pence. Above that, we're looking rather simply for a move back towards testing March resistance in the upper 50s, so 0.55, 0.57, that kind of thing. If we do that, then I think it will be the sign of a greater turnaround, maybe up towards the 200-day line at 0.8 pence plus early in the summer. Onto a stock which doesn't get much coverage here, but it's here today, Insig AI, and one would have thought with the AI handle on it, the shares should be soaring. Maybe they will start doing that. We've had a bear trap from below the initial March support there around 12 3/4 pence, and above that looking for 18 pence by the end of next month, after the probe to very oversold levels. The single digit RSI there may be a sign that the shares are ready to finally rebound and at least head back to where they were back in December in the mid-teens. Moving on to a rather more trending situation, let's say, well, positive trending situation. Here we've got Marula, where I've been looking for 10 pence for quite some time. I don't think we've quite managed to get to the 10 pence level. We just managed to be a fraction below it, but I think this week could be the week. And through 10 pence and the February resistance looking for 12 over the next couple of weeks, perhaps even sooner, given that this is the second or third time we're trying to get through into double digits. This stage only well below 9 pence, really recent support delaying the upside scenario. Stock which seems to be rising every day, even though it's not in a spectacular form, is Premier African, breaking all the resistance lines and all the targets there. So maybe I have to review those over the near term. We're basically looking for a penny, and hopefully we'll get that over the next week or two. After a penny, probably looking for a resistance line, as I've drawn now, up to 1.1 pence by the end of next month. Upside valid certainly while we're above 0.9, so above 0.9 looking for 1.1 on Premier African board. A steady pair of hands that has been. Not so steady last week was Phoenix Copper, and I looked at it, I think, yesterday as a potential rebound, given that there was a falling RSI support line. That seems to have worked. We've not only had a bounce off that, but also a bear trap rebound from below the old September support there at 20 pence. While we're above that, looking for the 200-day moving average at 30 pence, maybe over the next week or two, or the way things are going, much sooner. Quantum Exponential is next, and here you can see that we've had the shares having to retest the lows around 1.5 pence. Looks as though that's a higher low in place, and above that looking for 4 pence over the next 1 to 2 months, given the rebound off oversold conditions. Of course, you should wait for an end of day close through the 200-day moving average at 2.16 pence. On to Saietta, where it looks as though the Twitterati were right on this recovery after a bit of an overshoot to the downside. The shares were looking as though they put in a floor with that bullish divergence around 23 pence, and they made good on that. With a resistance line there, top of the falling trend channel from December, around 32 pence, and we're looking really for 40 pence by the end of next month, if we can stay above what was formerly resistance on the way down, around 26, so above 26 looking for 40 by the end of next month on Saietta, backed by the bullish divergence. Finishing off with Zenith, which may finally be ready to turn. Here has been a falling trend channel for the last couple of years. The lows there around the 0.42 area, and very oversold. The view here is that we could at least get back towards the 50-day moving average. That's currently around 0.62 pence by the end of next month, if we hold the current charting configuration, which we should, given that it's a 2-year trend channel. That's it for me today. More updates tomorrow.